Hey, Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. I'm here with my co host Bobby. We're joined by Brad from Early Riders once again. And this week's guest is a great one. It's CJ from MicroStrategy. He's currently wrapping up an internship at MicroStrategy on their treasury team. He's finishing up his final year at Harvard Business School, spent some years at working in private equity at Blackstone. So he's got a great depth of experience professionally as well as in Bitcoin. So really looking forward to a exciting conversation here today. Welcome.
Thank you, Mason. Thanks a lot for having me.
We always start with learning a bit more about our guest at the beginning. So, if you could please just walk us through a little bit more about your professional story and then what personally got you interested in Bitcoin and when.
Sure, I'd love to do that. So, my background is that I'm born and raised in Mumbai, India. Spent my entire life out there up until last year when I moved to Boston to start my MBA here at Harvard. But early on, when I was younger, I had an interest in science, technology. So, I pursued mechanical engineering during my undergrad days. I kind of fell out of love with engineering or science, and then, the next most lucrative track seemed like investing and finance. I didn't really have a background in finance, but Blackstone happened to come down to our campus to recruit for their private equity team. They paid more than anyone else, and I was kind of naive and wanted to make money. So I applied. I would say I got lucky through this whole recruitment program. And then I joined this really small, lean team of Blackstone based out of Mumbai. Again, same city, and just focusing on investments in India. So that was a great experience. I was there from 2019 to 2023, 4 years. Worked on some really big deals, did some really interesting structures on buying a company, selling a company, listing a company, all focused in India. And during this time, I think I understood like a lot of basics of finance, investing, just understanding how to build a thesis, how to build different rationales for different decisions. And in 2021, I remember very clearly and vividly, I was hanging out with my high school friends who were kind of up to no good, but they were making a lot of money trading crypto. And that got me really intrigued. I had no idea about like Bitcoin or crypto, except a very surface level understanding back then. And I thought I worked in finance and investing, so I should know how to manage my personal finances a lot better than theirs. And I kind of got greedy. I started seeing advertisements of these crypto companies all over the internet, all over different sports back in India as well. And that just got me going. And I went online, I downloaded some crypto app. And one day before, I think Elon Musk went on Saturday Night Live to pump Dogecoin or just talk about Dogecoin. I bought a bunch of Dogecoin, thinking, Dogecoin is going to $1 and whatnot. I believed into that hype. So I lost a lot of money over there. But that was my initial entry or initial foray into crypto, like the larger crypto ecosystem. And what happened then? So I think this was 2021. And then towards the end of 2020, or this was 2022 rather, the last part of 2021, the early few months of 2022. And then I started thinking that I want to apply to get into business school soon. And I had been thinking of applying to Harvard, Stanford, some other business schools. And I started thinking that I can differentiate my profile by adding an element of crypto into it. So I should study a bit more about crypto and get more, knowledgeable on crypto. And some senior at work who had an interest in crypto guided me to some Twitter crypto accounts to follow. That got me to Twitter crypto, which eventually got me to Twitter Bitcoin, got me to Bitcoin podcasts. I really liked Preston Pish's podcast, approaching Bitcoin from the value investing lens, macro investing lens, because I had that background. I found that sort of narrative very interesting. And yeah, once I sort of discovered that, then I was just falling down the rabbit hole, coming home late nights from work and just like listening to Bitcoin podcasts as opposed to, scrolling through something else or watching Netflix. And I just kind of became obsessed. And sometime I think mid 2022, I was just like this Bitcoin maxi kind of guy. Sold all my cryptos, bought Bitcoin, was talking about Bitcoin with everyone. Bitcoin fixes everything, fix the money, fix the world, that kind of thing. And all my friends, all my family was just Bitcoin, Bitcoin, Bitcoin nonstop since then. So yeah, that's broadly my background and how I originally found Bitcoin.
So you went from speculating Dogecoin before SNL to now appearing on a Bitcoin podcast and working at MicroStrategy, I'd say you've had quite the evolution there. You know, speaking of Harvard, where traditional finance dominates, how did your interest in Bitcoin strengthen or perhaps challenge any views that you had in the conventional financial education there?
Yeah, it's interesting because I came into the business school with very high conviction on Bitcoin, and I was expecting to find some like-minded people over here, either students or professors, like the faculty, and there would be the shared interest. And I'd for the first time in my life meet like-minded people in the Bitcoin space. But I was really underwhelmed. There was practically no one when I joined. There were 2,000 students across the first and second year of the MBA program. And over 6 months, I effectively found one other Bitcoiner, and that's about it. So that was an underwhelming sort of initial experience. And then, second, I kind of already, through everything I was learning, let's say through Twitter, YouTube, and just my own Bitcoin journey, was that most folks who've studied macroeconomics deeply in university just kind of have a very opposing view on money. And there's this concept or notion of government controlled money, elasticity in money, and that strong conviction in how money should work when you've studied macroeconomics is very sort of tough to pierce through. So that's one thing I noticed at business school. And the second is, even in the more traditional, let's say, finance or investing classes that we had in school, or the interaction I had with other sort of peers or friends who've been in finance, want to get into finance, they all conflate volatility with risk. All these different frameworks that are there around thinking of a portfolio, thinking about diversification, thinking about maximizing returns. It's all about like risk is volatility, volatility is risk. You think of Sharpe ratios, you think of how to maximize it for your portfolio, and it just kind of misses the first principles thinking that you need from understanding Bitcoin is money. So it's very difficult to sort of get them interested or get them hooked into like one simple first principle thing to get to understanding Bitcoin. So yeah, that's been my experience so far, at least, or my initial reaction when I came into business school.
CJ, it's a really good point because I reflect on my time going to graduate school, and I think it was far years ago, but there is such a, again, just a dominant theme throughout, again, even higher educational classes to hammer home the Keynesian economic just prototype, or I guess the theory, when in reality, I think for a lot of folks who live in the real world, there's this more of a simplistic kind of viewpoint of the things of how the world does operate. Of if there's not a lot of one specific good, well, naturally that price is gonna, or the price of that good is gonna go up in value. And so, I'd be curious to kind of, I mean, thinking about where you are currently, again, your age, your demographic, and kind of being around those folks, in such an institution of that caliber. Um, is it really just something that's a little bit put off to the side? Because, it might not necessarily be something that maybe that demographic of, Ivy League educated folks are focused on, or they just really just focused on finding that new opportunity, post graduation. But kind of curious to, again, given, how your generation, where they sit within the capital stack of the future, would love to try to let you opine on that for a little bit.
Yeah, I think it's a combination of factors. I don't think the business school environment in itself is very conducive for someone to understand a topic as sort of abstract, new, counterintuitive as Bitcoin. What happens, I think, is the incentives over here are such that you come in with a really good sort of background from the traditional sense, having worked at big companies, Ivy League education in your undergrad as well. And all the incentives are in place for you to sort of break the barrier and get into the next most lucrative job. You want to break into private equity, you want to break into hedge funds, you want to do investment banking, consulting. So many people are just very narrowly focused on that and trying to maximize this like chances or rate of success to get there. And if they're not doing that, and if they're sort of thinking, I might want to pivot, I want to take some time to reflect on my decisions in life, what new opportunity might be out there, then I think like the buzz over here obviously is all AI. And there are a lot of people who sort of are thinking, okay, AI is this next big trend. There are a lot of VC funds recruiting for AI. There are a lot of AI startups recruiting for their roles. So all of these people who have some time, who are curious, who are patient with new ideas, don't want to sort of think about Bitcoin right now. That hype is not there right now, right? When the bull market sort of runs up, then maybe there'll be some more excitement. Right now, it's all AI. So I think that's again a second layer of incentives, which just does it's not conducive for people to get Bitcoin over here. People might be curious, they might be like humble enough to also break down their current worldview of like how money works or finance works, but then they just don't have the time. And then there's just a lot of high time preference activities that go on over here. It's like you're here for 2 years, you want to have a lot of fun, you want to make a lot of friends, so you want to go to the parties, you want to go travel, you want to go just have a great time. You don't want to sit and listen to, let's say, Michael Saylor for 10 hours on different podcasts. So it's tough to get there.
Well, it's amazing that you bring that up also for a couple different things. One, Saylor is, we'll get to that topic in a moment, but I also think this concept of when you talked about everybody AI being the buzz, when in reality, Bitcoin miners are now, again, who have the access to high computing, data centers and have the energy contracts with the local utilities. Well, now they're the coolest kid on the block, and now all these AI companies need the Bitcoin miners to ultimately operate their business. So again, not to say Bitcoiners are always right, or we're generally early, but at the end of the day, we generally end up being directionally accurate with our decision making.
Yeah, just one quick comment on that is, while I completely agree with that, I foresee the unfortunate reality would end up being something like the most dominant narrative in the next 6 to 12 months, maybe at business school, will be decentralized AI, compute, crypto, or some of those marketing buzzwords. And this reality of what Bitcoin miners are doing will just kind of be lost in all the noise of crypto. That's my biggest fear, at least.
So that's a good point, and that segues into something the guys have inspired me to kind of ask you here is, as it relates to just interest among students at Harvard, has there been a growth of just attraction to Bitcoin generally, and if so, if not, what do you think within the curriculum or student groups would address that and just advocate for Bitcoin and spark some quality discussion?
Sure. So, a couple of points over there. One is that actually, when I entered business school, there was an existing student club at the business school that was focused on blockchain and crypto. And I just obviously had this kind of Bitcoin maxi perspective, so I kind of stayed away from it. But I think in general for crypto also, it's kind of fallen out of flavor with the bear market and whatnot. So there wasn't a lot of activity, there wasn't a lot of student interest. What I was kind of doing is I was trying to speak with my own friends and trying to, share my interest um, with Bitcoin with them and trying to sort of get them interested. Uh, there are many different things. Over time, I realized that, again, for the same reasons I mentioned before, it's really tough to do that. The other unique thing is the way the business school program or curriculum is structured. In the first year, 100 students out of 1,000, or like the 1,000 students are broken into sections of 100 each. And then you study with the same section of like 90 to 100 people throughout the first year, studying the same courses. You're not choosing your own elective, it's all a fixed curriculum. So through the 1 year of this academic program where it's all case-based learning, you're sort of reading cases and you're coming and discussing that case in class where the professor is just conducting a discussion between students. Multiple times my sort of perspective on just central banking, sound money, property rights, Bitcoin versus fiat, Bitcoin versus crypto, all of these ideas came up. And I kind of think I'm fortunate. I joined business school at the depth of the bear market. And then I was able to, opine on these discussions without the noise of crypto, which I think would otherwise sort of be the challenge if you join at the peak of the bull run, because then it's all about Bitcoin versus crypto. Right now, I could sort of discuss Bitcoin versus central banking, perhaps. So that's one. And second, I actually, towards the end of my first semester, sometime last year in November, came to a realization that it's really difficult to get students to be very interested. I started reaching out to my professors. So what I did is for all my professors in my first semester, at the end of the semester in November, and for all the professors in my second semester in April, I went and met each one of them one-on-one and gifted them a book on Bitcoin. So in the first semester was all the Bitcoin Standard by Saifuddin. In the second semester was Broken Money by Lynn Alden. Almost like, telling them, thank you for being a great professor, and, here's something I'm really interested in. Here's a great book that whenever you're interested in it, today, next year, 10 years from now, this might be a great resource for you to sort of fall back on and read and learn about Bitcoin, as opposed to everything else you'll see in the mainstream media. So some of the professors claim to have read a bit of it. Most of them, I guess, have not read it yet, but who knows? Hopefully they do sometime in the future. And on the curriculum side at HBS itself, like, I think just because of the way the system is structured, it's kind of difficult to be very fast with changing the curriculum and bringing in the newest idea. So they sort of had some cases on crypto earlier. They still have a case on Ripple, perhaps they teach, but it's more from like a legal perspective and trying to understand everything around the legal aspects of Ripple and XRP in this case. But there's no case I think that's written that explains Bitcoin holistically from like a technological angle, a monetary angle, regulatory angle. That is missing, so that's one big missing piece. And I think with time it should come out there. So this semester, I am personally trying to do an academic research project with one of my professors on the digital transformation of capital, and let's see how that goes. Trying to compare US treasuries with Bitcoin, trying to see how operating companies manage their treasuries, let's say 50 years ago, 100 years ago, in the US, in Europe, in Asia. How are they doing it today? What were the different milestones? Why did it evolve? What might happen in the future? And then hopefully that project can get some interest within the community here. I'm hoping for that.
Yeah, great. And I think, I mean, CJ, I think on that note, and as a person who spent time in business school, I would love to have a Bitcoin case study. And I think your time this summer, being at MicroStrategy, I think since 2020, them embarking on this Bitcoin Treasury strategy is going to be a case study in its own right. And so, we'd love first off for you to talk about how you ended up again getting to work at MicroStrategy, and then talking about your purview, and then would love to hear. I'll let Mason and Bobby jump on some additional questions on that are pointed about the summer internship and the experience that you had working there. So.
Yep, of course. And I should actually very quickly comment that there is a case written on MicroStrategy's Bitcoin strategy as well. So while there's not a case written on Bitcoin holistically itself, but there is one case written on MicroStrategy. And I actually think that is a great gateway for people to get interested, because once they see a publicly listed company sort of embarking on this journey and being super successful because of Bitcoin, it will get them interested. So that case is taught in a corporate finance course. I think that particular case study will be taught in November this year. Michael Saylor might come down to sort of be the protagonist in that case discussion and share what happened, how they made decisions. Hopefully, the price is up again. There's a bit more hype. There's a new all-time high, and you need that kind of excitement around for people to actually be really intrigued and really curious. But that's one. And then to answer your question around sort of how I went about also landing up at MicroStrategy over the summer. So I came in with the experience of private equity, but I had the strong conviction and interest in Bitcoin. My idea was that no matter what happens in the summer, it has to be something that's Bitcoin only. And then I went about many different sort of ways of getting there. I didn't do much up until last year, but starting January, February this year, what I realized is that everyone else in my peer group are looking at sort of breaking into new industries. We're all sort of reaching out to people via LinkedIn and emails and whatnot. I realized for me, it's all going to be Twitter. So I was sitting here just spamming everyone on Twitter saying, this is my background, this is my interest. Can you share some advice with me? And it's incredible how many people actually responded and how many small conversations I had, which either gave me just some long-term career advice or some personal advice or some very tactical advice. It was all really helpful. So many Bitcoiners that I sort of idolized, people I used to listen to on different podcasts, were talking with me one-on-one, sharing their advice. It was almost like speaking to a celebrity for myself. And that felt great. And I just kind of kept shooting in the dark, kept reaching out to everyone, trying to see where a role might open up. And the folks at MicroStrategy were kind enough to sort of find my profile interesting. They saw maybe a fit within the team. There was some need to get someone in and do some work over the summer. And it's just, I think, really lucky coincidence. And I got very lucky with the timing of all of it. So all the sort of pieces fell together, and the internship sort of was structured around my profile and the experience I had. So I did that. I was there for 3 months, and that was an incredible experience, and happy to, dive deeper into that as you'd like.
I wouldn't say it was lucky, man. I think you put in a lot of work to get to where you are now, and that's actually how I'm here at Early Riders and co-founding Acropolis. Is I was very interested in Bitcoin professionally and was reaching out to Brad and Michael and all the guys here, and now I'm here. So I think it's not luck. It's definitely you're putting in work and you're positioning yourself in the right way. So and I find similar experience messaging a lot of my Bitcoin idols and people that I would consider celebrities who are always keen to help me out or give me advice whenever I need it. And speaking of celebrities, let's talk about a Bitcoin celebrity in Michael Saylor. Not a lot of people get to interact with Michael Saylor. He's a bit of an unknown figure outside of his, CNBC appearances and podcast appearances. But what's one lesson or insight from him that particularly resonated with you during your time at MicroStrategy that you can talk about?
Yeah, that's a great question. I was obviously very excited to get to meet Michael Saylor. I didn't expect that might happen during the summer, but I was very, again, kind of lucky that this big conference was happening in Nashville right in the middle. Michael Saylor wanted some more hands-on technical, let's say, Excel modeling work for his presentation, which you might be familiar with. And we open sourced this Bitcoin 24 Excel model. So that's how I got to interact with him. And I think for me, the biggest insight or just personal lesson was maybe a couple of things. One is just, it was incredible to see the level of focus that Michael has when it comes to just work, thinking about Bitcoin or thinking about different strategies. And just sitting there in the same room with him and hearing him talk about these ideas, it's somewhat similar to also maybe listening to him on different podcasts, on let's say CNBC interviews, but there's this level of focus and intensity which is just unparalleled. And that is why I think he actually comes up with such unique ideas, such unique analogies to describe Bitcoin, and such visionary sort of frameworks. So that's one big thing. And the second, which might seem a bit more like, let's say, mundane, but for me was a big takeaway, was just seeing how effectively and how frequently he actually uses ChatGPT or like AI. The funny thing for me was like I was coming from business school where the one thing that was drilled into our heads for 1 year was stay away from these models for now, because the way the curriculum is taught, the way these cases are taught, we want you to read the case before class, come to class, and then engage in a discussion with your peers, and not be using ChatGPT to sort of extract, the main takeaways or see what happened after this business case, or the facts written in the business case. So I was sort of almost trying to stay away from ChatGPT. I was not training myself to use it as much, to just think and, just make it a second brain. And sitting there with Michael, seeing how he's like brainstorming, thinking of different ideas, venturing deeper into the existing idea he has in his head, just by sort of using ChatGPT, was like, it was a big takeaway. And since then, I think I've tried to develop this way of thinking more and pulling different threads of ideas that are there in my head through ChatGPT, and it's been like a good personal lesson for me.
It's awesome. Sounds like he's obviously a guy that drives his life by efficiency. I don't think that there's any doubt about it, and that allows him to get a lot more done than the average Joe. Would love to hear kind of getting more into the tactical weeds about the work that you were doing. What was one thing that was a surprising aspect from your point of view, working at MicroStrategy, from managing a corporate treasury of Bitcoin? And I think maybe the second follow up to that question is going to be, how do you really envision other companies starting to go down the path of understanding how Bitcoin can ultimately positively impact their corporate treasury?
Sure. So I think what was surprising, at least early on for me, was the fact that it's like an incredibly lean team. And while MicroStrategy obviously is a company that's been listed in the US for 20, 25 years, it's 30, 35 years old as a company itself, and has a lot of people working on the software business, but the Bitcoin side of things across finance, legal, accounting, tax, it's just a very small, lean team. Everyone does a lot of work. So I think just culturally, that was one surprise. Second was just thinking about what work there is to actually do, because I get this question a lot myself. When let's say back here at business school, that what do you really do at MicroStrategy working in the Bitcoin treasury team, because you're just buying Bitcoin and holding that Bitcoin and that's it. But the reality, the way I like describing it, like my personal analogy is, it's kind of like the inverse of a hedge fund, where in a hedge fund or a long only fund, what you're doing is you're spending all your time thinking about the portfolio of assets you want to hold and managing that portfolio, constructing that portfolio. And this is an inverse, because you're only buying one asset, Bitcoin, but you're spending all your time focusing on the portfolio of liabilities you want. So growing those liabilities, figuring out what liabilities you want to issue, when do you want to issue it, actually executing it. So it might be equity, it might be debt, it might be different kinds of debt. And that requires a lot of time, and that requires a lot of thinking, a lot of strategizing, and a lot of execution with multiple stakeholders internally and externally. So it's not as simple as just buying and holding Bitcoin. It's a lot of this work that happens, which is uh, very fast paced, very quickly, sort of evolving and changing all the time. I think the team also keeps learning new things as we keep expanding into uncharted territories. And given it's a lean team, it's a lot of hard work being put in by every person involved, which I actually like, which is the sort of culture I came from back in Blackstone, working in private equity in India as well. So that was really great. And Brad, sorry, you were mentioning the second part of your question was just how I see this evolving, or
Yeah, you've been able to see it from the inside of, again, the world-class operators of the Bitcoin treasury management that is, MicroStrategy and their corporate treasury group. And how do you really envision other companies? I mean, obviously we have the folks like Semler or a couple other businesses that are applying it. Obviously, this is going to really grow over time, and there's a playbook that MicroStrategy's published. But what do you really think is different, in the sense of how companies are going to now be more attracted to that opportunity, or what is that decision point for them to be pushed over the edge to say, hey, you know what, this is actually right for our business, even if it's just a small piece of the treasury.
yeah, it's interesting. I think I've been reflecting on that a bit because many people assumed after MicroStrategy started doing this, lots of companies would follow suit like very, very quickly, which clearly didn't happen. And this year we've seen, let's say, Semler Scientific, Metaplanet, few others sort of very actively talk about doing the same thing. So it's interesting because even within the Bitcoin maxis who had been thinking and learning about Bitcoin for 5, 10 years maybe, they also didn't very quickly latch on to just how good or effective the strategy might be. And it's only after you see the consequence of the actions and the results of the actions that almost from like an evolutionary sense, you want to copy it and you want to also succeed. So it's kind of similar to what my experience here at business school has also been. Like you can try to argue as much as you can, you can try to like show the thesis as much as you want to, but the most effective way is to actually just show it through your actions. I think there's another quote which I think Michael Saylor had said once, which is, or I think he's quoting someone else from, let's say, back in the early 1900s in the US, from which goes something like, "Go build the bridge, stand on the bridge, show it does not break." And that's the idea that you're doing something innovative, look kind of crazy and scary, but once you do it and once you prove that it works, you see more people copying it, adopting it, and sort of emerges from there in an evolutionary sense. And I think the other big thing that might happen is you still have big banks in the US in a position where they cannot custody Bitcoin. And I think that changing will really maybe have the next leg up in terms of corporate adoption, because who knows, maybe an Apple or a Google only want to hold Bitcoin when JP Morgan is holding it for them and they don't want to sort of do it in any other manner. And I think that is coming. Like that is coming when the day JP Morgan starts holding Bitcoin on their balance sheet.
Yeah, we agree on the custody component. I think that, again, I've been quoted saying that Bitcoin isn't, possession isn't 9/10 of the law; it's 100% of the law. And I think having the custody set up, particularly in a governance model that's going to be required by a corporate treasury, is very different than an individual holding Bitcoin. And so, at Acropolis, we spend a lot of our time focusing on how multi-institutional custody can bake into that. And I think, MicroStrategy has their own different ways of custodying the asset, but I think as this asset continues to grow and evolve, you're going to see these businesses not treating Bitcoin like a $50,000 asset. They're going to be treating it like a $3 million asset, which is the bear case what Michael Saylor had thrown out there. And it's like, okay, great. You have the strategy. You have all this excess productivity that you've pumped into this asset that's going to preserve over time. Well, great. The next thing you got to be focused on is how to preserve it, how to make sure you maintain custody, and it's safe and secure for the business to have in the future. So, we agree on the custodial component from, with a lot of gusto. Mason, any kind of overlap from your time at, obviously eBay Treasury? I think it's really unique that you get two folks who have had Treasury experience in the room. Well, maybe for you to, jump in and, give CJ's, an idea of what you were doing at eBay, and then maybe how that could connect to MicroStrategy.
Yeah, I think the landscape of Treasury at eBay is obviously completely different than at MicroStrategy. I like to say it's 100 different ways to earn 5%. It's not really about diversifying the assets for sake of diversifying the assets, but more about diversifying the risk and the correlations. And I think at eBay at least, and I think the same is true for a lot of similar companies, is the idea of, or just the ability to hold Bitcoin on the balance sheet isn't even really possible. And it would involve changing the investment policy statement. It would require board of director approval. There's all these different people who have all their different kingdoms that they manage, and Bitcoin just isn't a part of it. And it has not been a part of it. And it'll take time for it to become integrated into the treasury and the operations of the business. But I think the through line is when the businesses need it, they will find it. And MicroStrategy needed Bitcoin, and they found it, and it's proved very well. And as you said, numbers don't lie. Check the scoreboard, like Jay-Z says. So check the scoreboard. You know, we've had a whole epoch to look at MicroStrategy and see how that's worked out. So I think this playbook will begin to be adopted more broadly, and you know that's what we're helping with at Acropolis. So I think, yeah, couldn't agree more. And moving on to my next question, I want to imagine it's 2030. So imagine we're another cycle deep. MicroStrategy has been doing this for 10 years. What does Bitcoin look like in corporate treasuries worldwide? Is it more widely adopted? Are we still like struggling to adopt, or where do you think we are, CJ?
Yeah, that's again a very interesting question. I think with I really wonder what will happen in this next bull run, because if the Bitcoin price, let's say, shoots up 3x, 5x, 10x, who knows where the MicroStrategy market cap goes to, what the stock price goes to, and just how much attention it can garner. Because if it really makes a lot of big waves, and now all these restrictions in terms of other institutions getting into Bitcoin are sort of breaking down. You have the spot ETFs, you might have big banks custodying Bitcoin, you might have all these different custodial arrangements that you have with, let's say, multi-institutional custody with on-ramp. I think there will be a big wave of corporations adopting it. I actually find myself thinking about the nation state kind of adoption or game theory a bit more. Like, I wonder how many people could have actually guessed that this is how the corporate adoption would happen, that there would be one company coming in, all guns blazing, doing it in this way. It's not that intuitive. It's not intuitive to think that this company would have come in and would then also start issuing, let's say, more equity, more debt, convertible debt, buying Bitcoin with it, and this strategy working so effectively. And I really wonder if in the sort of next 5 years, 6 years till 2030, if there's some nation state that really comes through. Obviously, El Salvador is doing it in a particular way right now, but maybe another country, maybe larger, maybe more attention is garnered by them. And they're doing something that's just very counterintuitive or not easy to intuit right now, at least. So that's one thing that sort of I think about. But on the corporation front itself, I really wonder, like, coming in from the private equity background, once these fund managers or investors managing these large pools of capital in private equity or hedge funds start focusing on MicroStrategy's story, because this could have been a potential investment of theirs, right? They have mandates to only invest in, let's say, equity, private equity or public equity. And then they will actually see this as a missed opportunity. Then they'll be more interested. Then they'll learn about it. Then they'll get convinced. And private equity has, let's say, so many different mega large funds in the US, Europe, Asia, all over that manage billions and billions of dollars and have really low cost of capital in terms of both equity and debt, and they can access really cheap debt. They start understanding this strategy. I think that might be the next wave, like fund managers or investors, either in large funds or sort of doing their own thing, kind of like this whole SPAC craziness that happened in the last bubble during COVID. That might be the next way of doing this. Like, someone raises a lot of money, goes and capitalizes some operating company generating some cash flow, buys Bitcoin with all the capital that's been infused into the company, and then just copies the MicroStrategy playbook and issue debt, issue equity, and buy more Bitcoin with it. I think that might be sort of the next wave of corporations. I really like Parker Lewis's framing that it's not a hedge and it's kind of the solution. But I think when you think of it from the perspective of corporations, operating companies managing their treasury, I personally feel like the right framing is thinking of Bitcoin as just an investment, uh, and comparing it with other organic investments the company could be doing, or other inorganic investments, or let's say M&A opportunities they could be evaluating. And the way to think of Bitcoin maybe is, look at the returns over the last 4 years. It would be 40, 50% IRR, and then project what you might think it would be in the future for the next 4 years or next 8 years. So think of it as a 4 year investment or an 8 year investment. And if it's, let's say, delivered 40, 50% IRR in the last 4 years, you think the volatility is going down, you think the returns are going to be lower. Now it has a larger base. Let's say it's a 30, 40% IRR going forward for the next 4 years. Then compare that with the other opportunities and then make that investment decision. Uh, because what happens right now is that for most corporations or companies, their cost of capital will be somewhere between 12, 15%, or let's say 20%. And that becomes your benchmark, or that becomes your hurdle rate to say yes or no to certain investments. And then you have to sort of put Bitcoin in that same bucket, and compare it with these investment opportunities, and then make that decision that no, maybe we don't need to invest in this growth right now, because while it does beat our cost of capital, we have this more lucrative opportunity of Bitcoin, which just happens to be sort of managed by this treasury function, and it will be like a corporate treasury thing, but it should be compared with other investable opportunities. At least that's the way I think of it. And then what happens is, if you suppose are a company that has an organically growing business which has return over this 40, 40, 50% threshold, because let's say it's some tech services business or software business which is very asset light, which has negative working capital or low working capital, and the return metrics on that kind of a business are 60, 70, 80%, but that business is only growing per year at, let's say, 5%, 10%, 20%. So then that business will be throwing out cash. And again, now the question is, what do you do with this cash? Which is what all these big tech companies, even today, that are multi-billion dollars, think about, right? That you have all this cash accumulating. Now you no longer have any investable opportunity. There's nothing to compare with. And you're just sort of giving the cash back to shareholders. You're doing buybacks, you're doing dividends, but you're effectively decapitalizing the company and giving cash back. And that is where now maybe you have nothing to compare to, but you have to think of keeping it on the balance sheet as Bitcoin versus sort of giving it back to shareholders. And hopefully, as this MicroStrategy playbook becomes more popular, then that question can even become possible in the first place. Because right now, that question is not even posited in front of anyone. They just think of excess cash. We don't want to hold it on the balance sheet. We're going to give it back. We don't want to have dollars on the asset side. We want to rather have dollar liabilities. And that's just how the sort of system has evolved over years. And that's just how people think and frame these questions in their head.
It's a really interesting point, CJ, because I think at the core, corporate treasury is designed to not lose the money. I think traditionally it's very, very conservative. And so again, it's just a really unique point of view where all of a sudden this cash is very much viewed as a dollar liability because of its debasement properties. And I'll let Bobby chime in again for response as well. But I think it's a very big transition for corporate treasurers to go from viewing cash as this asset to ultimately this form of a liability.
Yeah, it's interesting. I feel a lot of people talk about, or I think Saifuddin describes it the best. And for me, learning about this from Saifuddin's podcast was really sort of inspiring, is understanding time preference and how Bitcoin lowers your time preference, because it's forcing you to sort of think long term, think about saving for 10 years, 20 years, 30 years. And then that sort of percolates with every other decision you make in your life and how you think about life itself. And once you start realizing that Bitcoin is not just the solution for an individual, and an individual saving for the future, it's also the solution for a corporation and a corporation saving for the future. What it does is also lowers the time preference of the corporation itself. And now, let's say, as a publicly listed company with a lot of Bitcoin on your balance sheet, you might not necessarily be as focused or distracted by short-term quarterly results, but you can instead make tougher decisions on your core operating business, generating cash flows, and solve for things that will generate more value 10 years out in the future, 20 years out in the future. So I think that's one unique thing. It sort of lowers the time preference of the organization itself. And second, I agree with what you were also saying, like just around the brand. Like I think again, Michael Saylor talks about this maybe, that Bitcoin is just the best or most globally renowned brand in itself. And when you sort of for lack of a better word, latch on to Bitcoin, you get all the benefits of the brand. Every single person talking about Bitcoin globally is helping every single Bitcoin startup or Bitcoin company out there. It's like almost like this free marketing or branding effort that is possible just because you are a Bitcoin only company, a Bitcoin only business, and everyone everywhere doing anything Bitcoin related is sort of free marketing for you. And that gets you good talent, that gets you good customers, that gets you good suppliers, and it just sort of helps you embed yourself in this growing network of Bitcoiners as individuals and as heads of different corporations. So I just think it's the biggest and best brand out there.
Beautifully said. Let's go ahead and wrap it there. Apologies for Bobby's connection issues. He's going through a tropical storm, so hopefully it sounds good in post. But this has been a great conversation, CJ. Really happy to have you join us. Send the people towards wherever you want to point them, whether that be your Twitter account or whatever you'd like. You can plug it, and would love to have you back on again next year.
Thank you so much. Thanks a lot for having me, Mason, Bobby, Brad. Really enjoyed this conversation. I do not remember my Twitter handle. I think it's CJ8YNWA, but maybe you can just put a link out there. And yeah, I'm really happy we had this chat. Looking forward to, having another one hopefully soon.
That's a true builder. He doesn't know his Twitter handle, everybody.
Thank you so much.
Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.